right, good evening everybody and welcome to Walks on Wall Street. We'll get started here in just a moment. But tonight is Sunday, so we are going to be doing the Markets a Look Ahead live stream where we're going to be doing a day-by-day, play-by-play, sort of a little bit of a forecast of what's going to be going on day by day on Wall Street. However, I think it'd be quickly appropriate. I don't want to hammer too much on the Silicon Valley Bank situation anymore. I think we pretty much beat that down to hell. And everybody's pretty well read up on it. So, we were speculating yesterday that there's probably going to be some sort of resolution for this massive banking catastrophe that has played out over the past couple weeks. And we do have an announcement. And just conveniently, this announcement was literally made a few minutes before futures started trading. Now, everybody knows futures trading here in the United States starts off at 6 p.m. Eastern time. So if you guys want to read the press release, this is a joint statement by the Department of Treasury, the Federal Reserve, and the FDIC. If you type !press, P-R-E-S-S, in the chat, the Nightbot is going to give you guys the direct link to this statement. Now, essentially what's going to happen is all of the depositors for Silicon Valley Bank will be made whole. And we were sort of speculating this yesterday that it's probably highly unlikely that they were just going to let the bank fail and all the depositors were going to be burnt. Now, I understand, and we sort of recapped this and talked about this yesterday and the day before about the argument of moral hazard. Should there be a bailout? Should the government step in? And we could argue that all day, right? And I think there's good arguments on either side here. But technically, taxpayers will not be on the hook for this backstop, right? So again, if you guys want to read through the press release of exactly what will be what's going to be happening, come Monday, no losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayers. Now, I would like to say, unfortunately, right, and I'm trying to just give you guys the news. I'm trying not to take a side here, but equity holders will unfortunately lose everything, right, as well as bond holders, which I think is the appropriate thing to do if you were going to find some sort of resolution. So essentially, stockholders of Silicon Valley Bank will go to zero, as well as bondholders. Now, in other news, we did just, if the news wasn't as crazy enough, right? If we weren't going through enough, Signature Bank, breaking news at the same time of the resolution, regulators will be closing and shuttering the crypto-focused Signature Bank, citing systemic risk. Now, we did talk about this briefly, I think, on Thursday. Now, if you look at the ticker symbol for Signature Bank, it is SBNY. So it is a New York-based bank. And unfortunately, I guess I'll give you guys the update here. So all of the depositors will also be made whole of Signature Bank, okay? Now, the very, very little deposits of Signature Bank were retail accounts, right? This is mainly a business bank used for the fiat onboarding to the crypto world. But just reading you guys the news here, depositors will be made whole. However, equity holders unfortunately will lose all their money, right? But I think that is the right thing to do here. We've discussed this ad nauseum yesterday. Yes, I think the appropriate thing is taxpayers should not be on the hook for any bailout. Extremely against that, which I think we've covered. But if there is going to be some sort of a backstop, I think it's appropriate that depositors that really had nothing to do with the mismanagement of either bank, I don't think they should have to pay the price. So depositors will be made whole 100%. I don't really want to have the moral hazard argument. I get both sides, and I agree with you guys. But in both cases, okay, I just want to make this clear before we start. Depositors of Silicon Valley Bank, as of tomorrow, at market open, you will be able to get all of your deposits, right? 100% of your deposits. Same with Signature Bank. However, equity holders obviously will be toast and fleeced, as well as bond holders. So if you look at Signature Bank, publicly traded company, SBNY, it's kind of amazing. I mean, this stock went all the way from $374 down to $70 as of Friday's close, and tomorrow it will be zero. All right, so team, we are going to go ahead with the markets to look ahead stream. There's a lot of stuff. I mean, this is a big week on Wall Street. So aside from all the banking catastrophe and the big calamity, right? And I'm going to read your guys' chats, I promise. It's going to be a very crazy day in the chat, I understand that. But it's a big week, right? And I don't think that, look, on Tuesday, I think it's going to be the most important day of the week. We're going to get the inflation data out. And I think it's going to be even more important than expected, because we are going through this existential banking crisis in the United States. And there's a lot of talk about next week if the FOMC is going to raise interest rates to the tune of 25 basis points, 50 basis points. And some people, factoring in this whole existential banking crisis, think that the Fed is going to pause. So we'll talk about that. But Tuesday, again, consumer price index, CPI data is going to be coming out. Consensus is for a 6% year-over-year increase. That is compared with a 6.4% year-over-year increase in January. Okay, but tonight we're probably going to spend most of our time talking about the core CPI data, because that is what the Fed most focuses on. All right, let me put my backpack on and we will head out. But let me say hello to everybody in the chat. Sparks Carnival, good to see you, my friend. Evan Weeks, welcome, welcome. Thank you for being here. I appreciate it. SBK Pilots says, how is the taxpayer not on the hook? The money has to come from somewhere, from the Fed through inflation. I guess inadvertently, yes. But again, let me actually do this now since I'm at my computer. Hold on. I just had it up. Let me do this, guys. So if you look in the chat, you'll see a chat notification from me. You can click the link, and this is the direct statement from the three entities, okay? So from the Treasury, from the Federal Reserve, and from the FDIC of exactly what is going to be happening. So please check it out and read the statement. But we'll talk about it tonight a little bit as well. Who else we got in here? Hey, Ray is here. What's up, Ray? Good to see you. Keith, Sabrina Fair, Wendy England. Welcome, welcome. Hope you all are well. Now, again, I get it, guys, and I understand and I agree, right, that taxpayers should absolutely not be on the hook for this. I think it is a form of crony capitalism. Yes, I do agree with that. But here's where the situation got a little bit sticky, in my view. And again, I don't really want to beat the hammer on this too much, because we talked about it so much yesterday and the day before. But this is a bank, right, with depositors. And I think a lot of people who really didn't understand how our banking system works, we run on a fractional reserve lending system. And I think a lot of people don't really understand that. So bank runs, in theory, here's a quick view of the office. But bank runs, in theory, are possible at any bank, right? No matter how, quote unquote, capitalized or stress tested they are. And it just so happened that Silicon Valley Bank was so connected and serviced a lot of these VC customers. I'll hold that thought because we're in the elevator here. Hey, Carol S. is here. Says, Tom, are there early warning signs that one's local bank might close? All right, I think the buffering should be over, team. We're going to head downtown tonight. So we are going to go to the Village. We were actually supposed to go to the Village, Greenwich Village, yesterday, but we got so sidetracked by all this conversation. But now we are reporting live East 31st Street, Madison Avenue. Gorgeous night. Absolutely gorgeous night here in New York City. So let's go ahead and head downtown. Now, I'll quickly give you guys my sort of final take on the situation. And again, the reason Silicon Valley Bank, and there's many, many reasons to this, but again, there's a lot of people comparing the situation to 2008 and saying, oh, the big evil banks took extreme amounts of risk. There needs to be, regulations, new rules and regulations in place to stop the banks from speculating. But if you actually analyze the situation and look at it, right, and I'm the first person to call out bank malpractice, and I mean, you guys know that. Guys, I mean, what really got them into this situation is because they were buying mortgage-backed securities that were backed by the full credit and faith of the U.S. government. Okay, it's not like they had a bunch of toxic assets on the balance sheet and were making bad loans, right? So they weren't making these horrible and bad loans, which could put the bank at existential risk. And I make this point to say, is management at fault at Silicon Valley Bank? 100%. So egregious malpractice, it was horrible. But it was really for the duration risk of those specific securities they were holding. And let me tell you something, okay? Every single bank, every bank, has these mortgage-backed securities on their books, right? And as we've talked about before, oh, the guy is back that tips over the garbage cans. It's so weird. As you walk down Madison Avenue and Broadway, there's some guy every night that just tips over all the trash cans. Weird. But a lot of banks have this stuff on their balance sheet. And essentially, when you purchase these mortgage-backed securities in 2021, the yields on these bonds were extremely, extremely low due to the environment we were in, right? So as the Federal Reserve raised rates, right, and I've explained this a couple times, the value, right, the realized value of those bonds are pretty much cut in half, right? There's an inverse correlation between rates or bond prices and yields. So if it was the case that Silicon Valley Bank was able to hold these MBS bonds to maturity, you technically wouldn't be in this situation, but there was a classic bank run, right, for multiple reasons. One of which is that in 2021, you had a huge influx of deposits into Silicon Valley Bank because they particularly bank with venture capital, right? And there was a huge VC boom in 2021. Well, when the Fed started raising interest rates, that spigot turned off. And VC firms weren't cutting checks, they weren't making deposits, and they weren't really investing that much. So the loan growth, or I should say the deposit growth, really fell off a cliff. And then, to a lesser extent, you also had a lot of these startup companies that were banking with Silicon Valley Bank that were unprofitable. They were drawing down on their cash reserves to fund operations. And as you have all these redemptions, right, the bank is forced to sell their assets. And as we've explained before, the assets that they were forced to sell were not trading at the same valuations that they bought them at in 2021. Quite the contrary, about 50 cents on the dollar. Now, where the management went wrong, and then we'll sort of get on to the new news on Wall Street, is they didn't diversify duration risk at all in these bonds, right? So they took $90 billion and they plowed it into 10-year duration mortgage-backed securities, and they didn't diversify duration risk, as well as they didn't over time sell off those bonds. If you look at a lot of other banks out there, they were in the same situation, and a lot of other banks were gradually selling off those securities to free up cash. However, it was sort of like a magic elixir over there at that bank, but we'll sort of talk about that later. Gary Carpenter's here, good to see you. DC322s is also the FTX collapse. On the crypto side, the FTX CEO was arrested for financial mismanagement. Well, I think that's a very, very different situation. I mean, you're right. However, I think the FTX situation is just total fraud. I mean, he literally was like a Bernie Madoff style Ponzi-like scheme. That was just, total, I don't think you could compare the two, right? But that's just the point I'm trying to make, guys. It's that, as the Fed, you got to understand, rates went up at the fastest pace they have since the 80s, right? Now, depending on what the Federal Reserve does at the next FOMC meeting, interest rates increased, and I'm talking about the Fed funds rate, by nearly 500 basis points in a little over a year. I mean, that's a massive, massive move. So you're bound to break something, right? So I think I just want to make clear it wasn't the same as 2008, where you have a systematic, real big problem in the banking sector where you have, tons of toxic derivatives and toxic loans being made. That's not the case. Where I think we could figure out where I think we could run into maybe a larger problem here is that there's a lot of other banks who are holding mortgage-backed securities and other fixed income assets that technically are underwater significantly, right? It's a little bit of a lesson in mark-to-market accounting for everybody, but assuming you can hold that to maturity, you're fine. Because if you buy a mortgage-backed security at 10-year maturity at a 1.5% interest rate, which is really bad, in theory, if you hold for the 10 years, you collect your interest and then you get the principal back. But the problem is, in a bank, if everybody wants their money out at the same time, you cause a classic bank run. And in theory, every single bank everywhere is susceptible to that, because we live in a society of fractional reserve lending and fractional reserve banking. And I've always said this, I really don't think the vast majority of Americans understand. Let me show you guys a cool view here. 1 second. Check this out, guys. Gorgeous view of the One Vanderbilt building here. Now, you got to understand, if I go to JP Morgan Chase and I deposit $1 million in the bank account, right? And then I log on to my Chase banking app and I see $1 million in there, right? It's actually really not there, right? Because in banking, deposits are liabilities. Deposits are actually not assets to the bank. Deposits cost the bank money. So the bank, what they have to do is then take your money and lend it out to try to make money on your money, right? And at the time, since we talked about, how SVB had over $189 billion of inflows of deposits to the bank, well, there was only so many loans that they could make out, so they decided to do the right thing, which is actually what the United States government tells banks to do after the Great Financial Crisis, which is to buy very safe mortgage-backed securities and treasuries backed by the full faith and credit of the U.S. government. So I just wanted to make that brief distinction. So it's not like they were speculating on crazy things. It was just the duration risk was horrible, and some of the venture debt was terrible as well. John Abraham, good to see you. Says, I read that some 80% of Silicon Valley Bank deposits were not insured. That is correct. So what it means by not insured, let me show you guys the clock tower here. We're right by Madison Square Park. Now, what it means by not insured is FDIC will insure depositors up to $250,000, right? So if I have $1 million in the bank and there's a bank collapse, I'm only insured, I'm only going to get $250,000 back. But, after today, it seems like it's an unlimited insurance amount. And I don't really want to go back and forth between arguing whether it's right or wrong. I think you guys know where I stand on it, but that's what it means by uninsured. And the reason why there was such a high amount, right, or such a high percentage of the bank that were uninsured is because, these were big venture capital firms and startups who were probably depositing their Series A funding into the bank to be used to run operations of the actual bank. Let me read some of the chats here. Hey, Ryan Beck says futures look spry at the moment. Yes, futures are ripping, and I tweeted something. I'm like, look, if they find a resolution or a bailout for the bank, futures could actually rip significantly. Brad's Brain says, Tom, your account is insured by the FDIC. Most accounts on there meet the threshold. Yeah, exactly. And I think that's why this SVB situation was very, very unique, because they mainly only banked VC firms and all of their startups, right? So the founders, right? So if I'm a startup and I got my Series A, chances are there's a 50-50 chance I'm going to go over to Silicon Valley Bank and deposit my, Series A check there. So I think that's why there was a huge concentration. It was almost like the stars aligned for this to be a disaster. Ominous is Treasury implied other banks are vulnerable. Correct. So in theory, guys, right, and this isn't to spook anybody, this is just how our system works. And we talked about this a lot last night. We live in a fiat system, okay? We live in a fiat system, and we live in a system of fractional reserve banking and fractional reserve lending. So technically, every single bank in America, everywhere, is prone to these type of things happening, right? I'll give you a quick example, but look at this gorgeous view of the Empire State Building tonight. Now, I hear we're supposed to, well, I shouldn't say that. There's a pretty good chance we may get a pretty big snowstorm Tuesday, but I was looking at the weather app on my iPhone, and it says it's supposed to be like 40 degrees. So chances are we're probably just gonna get a ton of rain. So I don't know if we're gonna be streaming on Tuesday. But anyway, if you look at what happened on Thursday, okay, and I would really implore everybody to go back and look, Silicon Valley Bank had to deal with $40 billion in withdrawals. I mean, no bank could handle that much, right? And I think, and maybe you guys in the chat could correct me on this, or just post it in the chat. I think banks, due to with regulations, at any one time has to have 10% of the amount of deposits on hand to readily give back to customers and things like that, right? Because a lot of all the other money is tied up in other loans. It's tied up in mortgage bonds and treasuries and things like that. And that's the system we live in, right? We live in a fractional reserved lending system and banking system. So if somebody yells fire in a crowded theater, yeah, there could theoretically be a bank run. And I think that's why, and we'll go into it a little bit later. I don't really want to sound like a broken record, but, a lot of people were saying, oh, look at, First National Bank, they could go under. There could be a really big problem there because they're like, oh, wow, look at all the mark-to-market losses they hold, right? Now, most of the banks in the United States are very, very healthy, very well capitalized. But if you spook people and scare the hell out of people, what's going to happen? Everybody is going to go rushing to their bank, waiting online to rip their money out. And that is the contagion. So the contagion is all psychological contagion. It just depends if, how the government handles this. And so far, I think they're handling it okay. Sargon says America is a mixed economy, not the free market capitalism that would be great. No way do we live in a capitalistic society, says Sargon. That's true, right? The United States is a republic. Mimi is here, says good point. Unijay says hello, Tom. I'm going to try to read as many chats as I can. Chinook says buy the pivot, rate odds dived big time in the last 12 hours. Could be nitness for the stock market. Matt Dyke says, hey Tom, are you for a bailout? Well, I'm not for a bailout, right? I think in this situation, taxpayers should not be on the hook, and they should not be involved, which they're not. The conclusion is for a backstop of the depositors. Now, if you guys want to read the breaking statement, I mean, this just broke a couple hours ago. Type !press, PRESS, and it'll actually bring you to the press release from the Treasury, from the FDIC, and then from the Federal Reserve as well. And it outlines exactly what the quote-unquote bailout is going to be, and taxpayers will not be on the hook. And that's sort of been my stance to begin with. I think any type, and I guess you could argue in this instance, right, is it some form of crony capitalism? Yes, but I don't think it's as egregious as if you force the American people to pony up the money. That I am totally against in every way. Evan Weeks is here. Good to see you, my friend. John Lee says, hey Tom, does this mean QE is on the table for now? What happens to inflation? Well, I think, in my view, everybody, right, and again, this is my opinion, we're going to head downtown to the Village tonight. I want everybody to read the press release, okay? Just so we're all, referring to the same document. In my view, and I'm just trying to give you guys the news, I don't want to be too biased here. In my opinion, that is a form of quantitative easing. Now, I want you guys to read the press release and then let me know if you agree or disagree with that. Because in the press release, it outlines what's going to happen to Silicon Valley Bank. And from the looks of it, it just looks like a big QE program. And in addition, outlines what's going to happen to Signature Bank, which New York State regulators shut down today. So hopefully nobody owns stock in Signature Bank or Silicon Valley Bank, because the equity holders and bond holders will be totally wiped out, totally. Steve CR says taxpayers will not be on the hook, LMAO. Yeah, so I guess I'm trying to be as unbiased as possible here. If you read the statement and you read the document, in some way, shape, or form, the public is probably going to be involved in some way, because if you think about the cost of inflation, right? If you think about the more QE providing more stimulus to the system, but again, let's say if you let the bank fail, right? Let's play this one out. Let's say if you let the bank fail and all the depositors got screwed. Now, there's a lot of people that are saying, well, it was only rich people that banked the bank. Okay, but there were a lot of startups who had all of their money in there, and they can't make payroll tomorrow. So if all the depositors were let to lose money, breaking news on Monday is, okay, this bank failed. Everybody in America is going to be like, oh my God, is my bank safe? I better go to my bank right now and rip money out. So it's going to fuel the contagion more and potentially cause an even bigger bank run. And I think America is waking up to the fact that, guys, that's the system we live in, a fractional reserve lending system. Bank runs can happen, right? And I think it's just about, if it were me making the decisions, if I was in government, and I think this may be happening right now. I'm not sure if Janet Yellen is going to speak tonight. I don't know. Maybe she is right now as we're doing this. But you gotta be very direct with the American people and essentially explain to them exactly what happened and explain to them what fractional reserve banking is, and say, look, the balance sheets of banks across the United States are healthy. This is what a bank run is, and explain it so people don't flip out on Monday and pull their money out of a local bank or a regional bank. I think that's would add to the problem. Mimi. Hey, Evan Weeks, welcome. Me just trying to get to as many chats as possible. Wayne McKay says the plan will also apply to Signature Bank, New York, another bank that regulators said they shut down on March 12th. That is correct. So Signature Bank shut down today. So unfortunately, or fortunately, depending on where you stand, equity holders and bond holders will be wiped out. And I tweeted this before on my Twitter. I'm like, look, at the end of the day, as it relates to Silicon Valley Bank, equity holders should be wiped out, right? And I know people who own big money in stock in this thing, but that's capitalism. You take a risk, you buy the stock, you're an investor, you got to do your diligence. You lose money, and it sucks and it's horrible, but you can't have the average American bail that out. So in the plan, the equity holders will lose money, bond holders will lose money, and same thing with this other bank that trades under the ticker symbol SBNY. They are also going to go bankrupt. Hey, Sparks Carnival, Silicon Valley Bank is like Washington Mutual. not a matter of running out of capital, but running out of cash. Yeah, you're right. Well, I wouldn't say it's exactly like Washington Mutual, right? Because, you know, in the 2008 sort of financial crisis, you know, we're talking about a lot of toxic assets on the balance sheet here. This was really, really horrible risk management as it relates to the duration risk. And it seemed like nobody at Silicon Valley Bank expected rates to go up. It seems like they bought the narrative that inflation would be transitory and rates would remain low for a long, long time. So that's what it seems like. Hey, Steph UH, awesome, good to see you. Felipe says 5% for bond treasuries, not bad. So Felipe makes a good point, right? And that's another reason why you started to see a lot of outflows from all banks, not just Silicon Valley Bank. If I have my money in a bank that's yielding nothing, but I look at the treasury market and I see that, you know, a 1-year US Treasury is yielding 5%, well, that's a lot better of a deal. And I was talking with my friend today, and then we'll sort of move on to the other news on the street. We've really been hammering on this. I was talking to my friend today, and I said, look, a lot of people out there, right? We can sort of get caught up in our little inner sphere, right? You know, we're talking to, you know, probably 500 people here on the live stream. We all focus on the markets day to day, right? We pay attention to it. There's a lot of people who don't, right? And they shouldn't. They shouldn't have to pay attention to the market like crazy. Maybe they're a teacher, maybe they're a doctor. They're doing whatever they got to do. So they just leave their money in the bank and they don't really think about, oh, what's the better trade-off? Should I leave my money in this bank? And then, you know, even if I'm earning nothing, they don't think about, oh, I could just buy treasuries now and make a lot more. And once people start to wake up to that, I mean, think about the bank run that could cause, right? And especially with this, you know, SVB thing brought to light, a lot of people are going to say, why in the heck should I leave my money in XYZ bank when there's risk of a bank run, there's risk of this, when I could just go over to the US Treasury where it's going to be safe and protected and just buy a 1-year Treasury that's going to yield me 5% risk-free. I think that could be also a major catalyst for huge money to start to move out of banks. And I think that's something that the FDIC, the Treasury, and the Federal Reserve is sort of monitoring. Hey, Jenny Trickett, good to see you. All right, team, so we are now at Union Square. You can see the Whole Foods in the distance here. Hey, Denise Clark is joining us. Good to see you, Denise Clark. Sabrina Fair, well, hey, MBA Elias is, where are the regulators? Why should the government permit any bank to accumulate deposits in a single industry? That's a good point, but, you know, I think it's easy to say that stuff in hindsight. But again, you're right. To MBA Elias's point, they had a ton of exposure to the venture capital industry. And as we talked about, there was a huge mania in venture capital, right, in 2021. I mean, tons of money. I mean, VC checks were being written left and right. And then in 2022, the VC spigot completely shut off. So you had a combination of these unprofitable businesses drawing down on their account balances, but that was really less to do with it. And then obviously you had the MBS situation there. But you're right, when you have a bank like JP Morgan Chase, a bank like Wells Fargo, a bank like Bank of America, to MBA Elias's point, yes, there's institutions that bank with the bank. Yes, there's big businesses and big players, but there's also people like me, right? Normal people that have maybe an account balance of, you know, a couple $100,000 or less, right? So you have that diversity risk. So what really happened is, you know, it's turning out to be one of the greatest investors of all time, Peter Thiel, you know, started to see what was happening right in real time. And I think it was Moody's, one of the biggest credit ratings agencies, actually issued a warning about Silicon Valley Bank and said, look, deposits have been in a structural decline for quarters now, quarter over quarter of deposits slowing, withdrawals are ramping up, and they're going to be forced to sell these mortgage-backed securities for pennies on the dollar because interest rates went up so high. And so what Silicon Valley Bank did is they said, okay, we'll do a block of, I forget what it was, I think it may have been like 40 billion or a little bit less than that. I forget the exact number. I think it was 2 billion in sales of these mortgage-backed securities. And people who banked with the bank were like, whoa, why are you doing that? Why do you have to raise money? And that spooked the crap out of people. And Peter Thiel, allegedly, told his entire portfolio. Again, we're talking about VC firms, right? So if you're a venture capital firm or a fund, you invest into early stage startup companies, right? And in a lot of the term sheets for these deals, right, if you were going to write a check, you would say, okay, we're going to give you this money, but you have to deposit it in Silicon Valley Bank. So Peter Thiel, over Slack, allegedly, told everybody to rip your money out of the bank. So if you have one of the greatest investors of all time that's well respected in the venture capital space telling all of his companies that he invests in to rip money out of the bank, you don't think that's going to get around the startup community? You don't think that's going to get around the VC community? I mean, it is a very, very small world. So in and of itself, that sparked a massive, massive bank run. And here we are today in the big crap show. Check this out, guys. Look at the One World Trade Center tonight. Very clear night. Looks awesome in the back. Sparks Carnival says the sheer speed of the downfall at SVB is astounding. It really is, man. It really, really is. I mean, this whole weekend has just been a huge whirlwind. Terry says, Tom, what are your thoughts, if any, on the cannabis industry stocks? I don't want to make a comment on individual stocks, but I could say with certainty right now that the vast majority of publicly traded stocks that deal within the cannabis industry are not profitable. So I tend to stay away from those. However, I am a big proponent of the marijuana industry in general. That's what I could say about that. Yeah, Paul Mendy says Mr. Thiel was just doing his diligence, sadly. And that's the thing, right? And that goes back to the argument. When it's dealing with the bank, I think it's a little bit different than any other business. And I'll give you an example. Let's say, you have a company, right, with 1,000 employees. They make some bad bets. They develop some bad software. They go out of business. There should be no bailout. But when you have a bank with like regular people's deposits in there, it's really a sticky situation, because essentially what a lot of people did is they just said, okay, I have a business, I have $2 million, I'm going to bank with Silicon Valley Bank, and then poof, all their money is gone the next day, right? That is not a good look for the integrity of the U.S. financial and banking system, in my view. And I understand the arguments about moral hazard, and I actually do agree with those arguments, but it's definitely not a good look. This whole thing is not a good look. Hey, Kevin Ramsey, what's up? Good to see you, Kevin. Thanks for joining us tonight. Square Bets says the government announced SVP depositors will have all their money on Monday, and Dow futures are up 300 points. You are correct. And so for anybody joining, if you want to read the press release by the FDIC, by the Federal Reserve, and by the Treasury Secretary, Janet Yellen, just type !press, P-R-E-S-S, !press in the chat, and you will have the actual document that outlines exactly what's going to happen with Silicon Valley Bank and Signature Bank that regulators forced to close today. So if you were a stockholder in either SVB or ticker symbol SBNY, Yikes, that dog almost ran out in the street. You lost all your money. Pineapple Water says insecurity in financial markets equals GLD call options, so you're bullish on gold. Well, here's an interesting thing, guys. Bitcoin, during this whole entire banking collapse, went from $19,500 all the way to $22,500. That's a 15% bid in Bitcoin. So huge rally there in Bitcoin. And I think Ethereum as well. Charles D says the 1% invest their money. It is not being saved in a bank, says Charles D. Mike C, welcome. Good to see you. So we are now on the campus of NYU, New York University. This is East 8th Street. We're going to head over to the Village today. TMB says, Tom, what I find interesting with futures is they have been in a range with modest downside bias since the announcement. Yeah, well, I wrote this down. I actually wanted to read it to you guys, and then I promise we'll get into the market to look ahead stuff. But you know what's it's almost like we're living in a simulation, and I'll sort of explain why. So check this out. 15 years ago today, okay, 15 years ago today, Bear Stearns came out and they assured investors. Does anybody remember this? I was actually too young to remember this in person, obviously, but I'm sure maybe many of you actually have a pretty keen memory of this. Anyway, 15 years ago today, guys, on the day of the collapse of Silicon Valley Bank, Bear Stearns actually came out and they were telling the investors and telling the market, no, we have ample liquidity, we're good, we're not going to go under, there's no existential crisis at our bank, everything is fine. We know what happened on Mad Money with Jim Cramer. Fast forward 4 days. Well, JP Morgan Chase comes in and buys the bank for $2 a share. And if you remember this, the Fed came in, saved the day, printed a bunch of money. JP Morgan Chase were the quote-unquote heroes, buying the bank, bailing out Bear Stearns, buying him at $2 a share. The market actually rallied the next day, rallied about 4.5%, but a year later, stocks were down 42% during the great financial crisis. So it's so strange. Isn't that crazy? It's so strange that around the same time, we now in the United States are dealing with another insolvent bank. So I tweeted about this today. Here we are at Washington Square Park. I tweeted about this today and I said, look, should there be a resolution to this Silicon Valley Bank debacle and depositors are made whole, I think you're going to see futures rip. I think you're going to see Bitcoin rip. And I think tomorrow could actually probably be a pretty big positive day in the market, at least on the open, and then we may fade. But I don't think we're out of the woods. I mean, this could possibly play out very similar to how it did in terms of the price action of 2008. And what I mean by that is usually what happens days after is something that I like to call the cockroach theory. And I think we may have talked about this before. But, let's say you're a college student, right? This is, really quick, this is Washington Square Park, one of my favorite parks in the entire city. It's really gorgeous. And they cleaned it up too. They cleaned it up. There's no garbage on the floor. I think the NYPD and the city did a great job. It's a really wonderful park. If you've never been in it, definitely come, right on the campus of NYU. In any event, so let's say you're a college kid, right? You're looking for an apartment with your buddies, your roommates, your friends, right? And you're looking at all these sort of rundown kind of college-style apartments, and you see a cockroach run out from behind a dishwasher or something. And you're like, it's just one cockroach, no big deal. You can best believe that there's probably 10 other cockroaches behind that dishwasher, behind that kitchen counter. And I think you may start to see that happen this week, or I should say going into next week. I think a lot of people are going to say, look, it's fixed now, depositors are made whole, everything is great, but I don't know what it's going to be, right? And this is just my speculation. It could be another bank, it could be more banks, it could be something, I don't know. I think you're going to start to see a domino effect here of, I want to be very choice with my words. I don't want to say contagion, of problems that I think that we may need to address as a country. I don't know what that might be, but it usually happens in that sort of style. Hey, Anna's here. Says, how are you? I'm doing good. Charles Crawford says, bad news feeds itself. Well, I think the good news that we could all agree, and maybe some of us wouldn't agree, is that depositors will be made whole. However, it's not like the fat cat bankers are going to be, off scot-free. Equity holders are totally decimated. C-suite is totally kicked out. This is what I would like to see everybody make, not as a revenge play, but there was some very interesting, I would even call it questionable stock sales by the CEO of the bank and multiple others in the C-suite just days before the collapse of Silicon Valley Bank. I think Gary Gensler in the SEC will be looking into that. It just doesn't seem ethical, and there could have been some insider information there. So I think, I'll leave it at that. I think I can't imply that there was malpractice there, but I think it's pretty freaking obvious. Hey, Ramsey is here. Good to see you. Says, hey, Tom. It's good to meet you. Just saying hi. Welcome. Welcome, welcome. We have a gorgeous view of the Empire State Building to the north. It's a very calm night here in New York City, probably about $40. $40. This weekend has been so crazy with crunching numbers and things like that my brain is totally fried, if you couldn't notice. Hey, James Tiger says, Coinbase said it had $240 million balance at Signature Bank, which has just been closed by the state authorities, says James Tiger. Yeah, a ton of people did as well, and a lot of companies did, but with that bailout, quote-unquote bailout program that the Treasury and the Federal Reserve put together, everybody is going to get their deposits back. So could it be a non-issue? Could it not? We'll see. Ronan says, have you gone on an ATM run yet? No, I haven't. I think the best thing to do in a time like this, and I can't advise anybody what to do, but it's just to chill out, right? Chill out. If you understand the situation, bank run is literally all about trust and faith in the system. And when you have a societal breakdown of that trust, that's when people don't feel comfortable leaving their money in the bank, and then they go and rip it out. So I have not done that. I'm doing nothing. All right, NBA Elias says Silicon Valley Bank CEO and other officials will hear a knock on their door soon. NBA Elias, maybe you know a little bit about that, right? So I had a conversation with my friend today, and he said it may not be illegal. Now, it could be an ethics issue, but I don't really know the legalese about that. Now, technically, as long as you file your stock sales or exercise an equity option or something like that, there's nothing illegal about that. I don't know the laws. Obviously, it looks like a huge ethics lapse. Just put yourself in that situation. If I was the CEO of a bank, I probably know if my bank is going to collapse. Unless you're totally ignorant. And these people are not ignorant. They're not stupid people. I don't know if I could do it, guys. I don't know if I could sell $3 million and just walk off into the sunset. I would just feel so horrible about myself. But I don't know. Maybe if anybody who has maybe any securities background, is there a legal issue there? I don't know. I think there may be. Because if you're a CEO and you know that the stuff is going to hit the fan and then you start selling your stock, is that, I don't know. It's tough. Yeah, NBA Elias says it's tough to prove intent exactly. So when did they know the collapse was coming? It's all in the financial statements. You're right. Well, in theory, right, and there's been a lot of talk on Twitter. Real quick, I just want to show you guys this. This side of the park used to be so horrible, and they totally cleaned the entire thing up. This is the northernmost western side, the northwest side of Washington Square Park, and it's back open to the public, and it's clean. So I just wanted to point that out. Now, a lot of people were saying technically the bank was insolvent a year ago. Yes, technically yes. right? But again, that goes back to what we were talking about. If they were able to hold those bonds to maturity, would they be fine? Yeah. But if you had to deal with a huge amount of withdrawals, you would be forced into forced liquidation of those assets, and you couldn't cover all the withdrawals. So that is totally true. Brendan O'Brien says they still didn't violate the law, didn't breach any fiduciary duties, and didn't disclose non-public information. This is Brendan O'Brien. Sabrina Fair says James Tiger, many high depositors at Silicon Valley Bank. They were over 50% lent out, very foolish. Ronan says rich people don't ever face real consequences, even if it was illegal. It's just a question of morals. Perhaps. But guys, I think we've pretty much beat that like a dead horse. Look, I mean, we're going to get a lot more information and data coming out on Monday. But again, if you're just joining us and you want to be brought up to the fullest news, the breaking news, again, if you click or type !press in the chat, I programmed the Nightbot to drop a link to the Department of Treasury, the FDIC, as well as the Federal Reserve's statement on the issue and exactly what is going to be done to backstop depositors. But Tuesday is going to be a very, very big day on Wall Street. So amongst all of the crazy bank failure that's going on in the United States, amongst all of the fears of inflation, we are going to get the CPI report. So the Consumer Price Index is going to be coming out on Tuesday. So Tuesday the 14th, that is going to be a very, very big day. Now, if you look at futures on where the projections of the new policy decision will be, this week was all over the place. It was at a 50% chance of a 25 basis point rate hike. Then it went all the way up to a 50% chance of a 50 basis point rate hike. I would assume, and I haven't checked it, I was a little busy, I would assume those percentages have gone down significantly for obvious reasons due to just what happened with two major bank failures in the United States, with potential some more on the way. So I don't know, what do you guys think? Assuming CPI comes in worse than expected, check out these buildings here. I always like to show these three. Gorgeous with the fire escapes on them. For some context, this is on the corner of Washington Place. We're headed downtown. But if you look at the consensus for CPI, we're looking at about a 6% year-over-year increase in CPI. Now, if you think back to last month when we got the January numbers, we came in at about 6.4%. So this would show a little bit of deceleration. However, if we do come in hot, I think the Federal Reserve may be between a rock and a hard place here. Because think about investor psychology, and we talked about confidence in the system. Right, I think we can all agree here that people were pretty frightened over the weekend. Right, I mean, fear was probably at some of the highest levels I've ever seen in my career, in investing money. Right, especially in the circles that I was dealing with. Like, fear was crazy. So, if the Federal Reserve, and again, I want to know what you guys think because we have a big diversity in opinion here. If the Fed comes out and goes big with the 50 basis point rate hike, I think that could spook the markets quite significantly. And you could have possibly a big uproar from people saying, you just had a bank go insolvent, you had a bank go under, you had to bail out a bank, and you're going to be so reckless as to raise rates even more when you could even argue that raising interest rates is what caused the problem in the first place because the value of those bonds that those banks were holding got crushed because rates went so high. So I don't know, anybody in the chat, you guys think that we're going to get a 25 basis point hike, 50, or do you think the Fed is just going to pause and wait till the dust settles here? Because if they pause and say, look, all the leading indicators, the leading economic indicators on inflation are showing us that inflation is coming down. Let's see what happens. What do you guys think? Kirby says, don't fight the Fed. Agreed. Hey, Hollywood Bob. Good to see you, my friend. Thanks for joining. Jeep guy says, you think they're going to pause? Ninus is questionable. It's happened in the past where stocks sold before a collapse happened. Ryan Beck says, you think it's going to be 25 basis points? Potentially. NBA Elias says, Tom, in light of the bank failures, how about a 0 basis point rate hike around this time? They will be under pressure to do this. So you think there could potentially be a little bit of a pause. Now, I don't know. Let me get away from these people for a moment. Now, if you look at where the Fed funds rate is now, right, just for some review so we're all on the same page, the target rate is 4.5% to 4.75%. So even assuming if we get a 25 basis point rate hike, well, I should say to solidly push us over the top, if we get a 50 basis point rate hike, that is going to put us at a 5 handle on the Fed funds rate. And granted, everything went down this weekend, I think that could spook the markets quite significantly, in my opinion. Now, I always point out this building whenever we're in the Village. Gorgeous architecture here. Love the fire escapes. I see Mustafa says, hello, guys. Welcome. DGB says 50 basis points. Let the weak fall. So you think that the Fed is going to show no mercy, raise rates, go big, and break something even more? Potentially. I wouldn't, with all the crazy stuff that's going on, I wouldn't be super surprised. I don't know if that's the right thing to do, but I mean, you never know in this environment. Ryan Beck says it's all about optics at this point. Dude, it is all about optics. All about optics. I mean, I've been seeing a lot of things where you could debate whether, you know, Janet Yellen, which is the Treasury Secretary, came out and tried to ensure confidence in the market. I just don't think she's very persuasive, and I'm not trying to be mean, like in a mean way, but I think you need somebody that's stronger, that has a more commanding voice to come out and assure everybody to remain calm. I just don't think the American people take these people seriously, to be honest. Now, I think this is Taylor Swift's old apartment. We've been here many times. Sunshine After Rain is joining us. Good to see you. Lila says, I knew about Silicon Valley Bank and Signature, but what is the third bank? Well, there's a lot of speculation that First National Bank is in trouble. But again, this is all, it goes back to Ryan Beck's point about optics, right? Because in this system, in the fiat monetary system that we live in, the fractional reserve banking system that we live in, technically all banks are prone to bank runs. And the theory on Wall Street is it's too risky of an environment, so I'm only going to bank with the big four banks. I'm only going to put my money in JP Morgan Chase. I'm only going to put my money with Bank of America, Citi, and so on. And that is actually very dangerous for the health of the U.S. economy, in my opinion. We don't want to live in a country where we have this oligopoly of these, four banks making all the decisions. We want local banks. We want local credit unions because, again, I gave this example yesterday. In middle America, where there's a lot of agriculture, which is so important, I think was probably the most important thing in the United States, feeds us. I don't think it's appropriate for a banker in New York, that's a city boy, to be doing the banking with a farmer in the agriculture business. You want that sort of banking relationship to be done face to face at a local bank where you could actually see your banker in person and they understand the business a little bit better, right? I mean, banking is all about relationships. Banking is all about sales and understanding the people you're lending to. And I think, in my view, if you have just all of the big banks with all of this bureaucracy, you're not going to have that niche expertise that's really needed to service customers, right? And that's the most important thing in my point, is being able to service customers in the United States in an appropriate way so that our economy is healthy. And this whole Silicon Valley Bank thing is scaring the hell out of a lot of people to say, hey, if I don't bank with the name brand Chase Manhattan or Bank of America, I'm afraid I'm going to lose all my life savings. And that's not the case, right? I can't tell you guys what to do, but it's just not the case. But it's scaring the hell out of a lot of people. And in my personal opinion, right, and we all have differing opinions, I don't think it would be healthy for a country to have 4 big banks and nobody else. I think that would actually be an absolute disaster, in my view. Hey, Tariq Khan says tomorrow and Tuesday will be the day to go balls deep. So, Tariq, can you expand on that a little bit for us? So are you sort of speculating that we're going to get a big waterfall sell-off on Monday, and you think there's going to be a buying opportunity on Tuesday? Is that sort of what you're saying? Ronan says this is like watching a cat burglar. All right. Brendan O'Brien says it's not the case currently, but could have been if they didn't backstop deposits and there was a run on regional banks. Exactly. So that was like the big argument, right, over the weekend is if you don't make depositors whole, right? So if there was not a plan at all, and on Monday, people were able to wake up with $0 in their bank account or not access to any money in their bank, that would have caused massive pandemonium, and you would have lines at banks of people trying to, get their cash out. I do agree with that. So I think that risk is mitigated now. Check out the building right across the street, guys. This is a really, really classic old New York building. I love the contrast between the brick and the extremely bright. It actually looks like a fresh coat of white paint on those windows there. It's definitely, how should I say it, a little bit more pleasing to the eyes from all the buildings in Midtown Manhattan that we see all the time. I love coming down here and seeing the older, history of New York. Some of these buildings are over 100 years old, by the way, guys. Really gorgeous down here. Yeah, Ryan Beck says timeless. And I've noticed it's a quiet night down here in the Village for a Sunday night, actually. This is Italian Specialties. I've never been in here. Hey, Hawaii, good to see you. Thanks for being here. I want to be GMO says, well said about banking diversity. Yeah, I mean, it's just because thinking about it, the United States economy is so big and it's so powerful, and I don't really think many people truly understand that. I mean, you have to really think about this for a moment. I think about people on that watch the stream, watch Walks on Wall Street. We come from all different backgrounds, right? Yeah, we have a lot of people who work in traditional banking, right? We have people who, work in tech, right? But we also have people who are mechanics, who are electricians, who are pharmacists, who own big manufacturing companies, right? Who own bullion broker dealers, and who own farms, who own local farms. And you need a very niche banker, right, who knows that industry, right? If I'm going to write a loan and lend money to a farmer, I don't know anything about a dairy farm. I don't know. I'm totally ignorant and incompetent when it comes to that. But a local bank or a local regional bank where you could actually sit down, right, across the table from your banker face to face, they can better assess the risk of that loan than, if we just have everybody crowding in big cities making decisions on behalf of people who run industries that they know nothing about. So I think this situation could get really bad if the faith, right, just going back to what Ryan Beck said about optics, I think that's a really good comment. It's all about the optics, right? If nobody has trust in these regional banks, they're going to pull their money out. And I think after today, right, it might not have been the best solution, but guys, we had 48 hours to figure this out. Let's sort of, play devil's advocate here. The government and the Federal Reserve had 48 hours to throw something together, right? Or it was going to be catastrophe on Monday. I think we could all agree with that. Hey, Frank says, Tom, I'm in the music industry in Nashville, Tennessee. There we go. Love that. Keith is big and powerful, but not invulnerable. Terrell says, nobody walks in LA. Nobody cooks in New York City. That's true. When I lived in Manhattan, I very, very rarely used my kitchen. Pity P says, hey Tom, new watcher here. You came up on my YouTube recommended. Hey, well, thank you for watching and thank you for being a part of Walks on Wall Street. We appreciate it very, very much. Tony Lagas says, hey Tom, my friend, welcome from Sydney, Australia. Thank you so much for joining us. Lucky says, Canada has the 5 big banks. They are among the best run banks in the world. Raise their dividends every quarter. Maybe it works because Canada's population is approximately 35 million. I don't know about that. I wouldn't agree that they're some of the best run in the world, but I see your point for sure. Tariq says, yes, I am hoping we don't have multiple banks folding, but those that have cash, it's a great time to double up. Maybe, potentially. Definitely, potentially, Tariq. Now, this is actually a New York-based startup here. It's called Blank Street Coffee. Coffee's actually pretty good. Now, their whole value proposition is they purposely look at the price of Starbucks and undercut them. And the way they're able to do that and maintain margin is they take out smaller cafes. So you'll notice a lot of the Blank Street coffee cafes, and this is just from what I was reading. I didn't really look at the books. There's really no way to. But they take out smaller sort of spaces, and they do a lot of marketing on social media to attract crowds. And since they're saving on the square footage of the place, I guess they can undercut the price of coffee. Really quick before I forget, we have a gorgeous view in front of us of the World Trade Center. Tuesday, we're also going to get a pretty interesting look into the home builder market, right? So we've been talking about the home builders and how interesting it is that they are very resilient, right? So if you look at KB Home, if you look at Toll Brothers, we're going to hear from Lennar. Ticker symbol LEN. They're reporting their earnings on Tuesday, I think after the bell. And I can bet you almost 100% there's going to be a lot of talk about this Silicon Valley Bank situation. There's probably going to be a lot of analysts asking the CEO, do you think that this is going to impact customer buying decisions? Even though depositors are going to be made 100% whole, it's going to leave a mark on consumers, I think, especially if you had a pretty big account balance and then over the weekend you were scared like hell that you weren't going to have any money in your account, and now you know that you do. Could that impact buying decisions? So I think we're going to get an interesting insight into the health of the home builder market. We're going to see if inventories are piling up. We're going to see if that home builders are being forced to slash prices of new homes to move product. So I think we're probably going to do an in-depth dive on the stream into Lennar. Again, the ticker symbol is LEN. Charles Crawford says there are too many units on the residential market right now. MBA says many weekend getaway plans at the Fed and Treasury went down the drain. Non-stop 2 days of work dealing with the Silicon Valley Bank fiasco. Oh, 100%. I mean, I could guarantee anybody who pretty much worked in finance or worked in, at a startup, we probably didn't get a blink of sleep this weekend. Let's just say that. Hey, Zubin says Charlie Munger and Warren Buffett always warn that crypto is garbage. I wouldn't touch it with a 10-foot pole. Charlie said, glad I listened. Yeah, so you're right. Warren Buffett and Charlie Munger are not big crypto bulls. They think it's rat poison. Now, I think you guys know where I stand. I do have exposure to Bitcoin, but I think all of these other alternative coins are either scams or they're going to be classified as securities by the SEC. Now, funny enough, guys, when this whole banking calamity was going down, Bitcoin rallied 15% in 2 days. I think we're back over 22,000 now. We're probably gonna have a pretty big bid in gold. You know what would be interesting? could anybody look where futures are at right now? Let's take a look at gold and silver futures. I'd be interested to see if gold and silver is up tonight. And before we actually started the stream, I think ES, which is the ticker symbol for S&P 500 futures, or E-mini futures, were actually up about 1%, which makes sense. Midi Matt says, do you think financial stocks are going to be down tomorrow even more? They dropped quite a bit on Friday. Well, I think there's actually a good chance that the market may be positive and rally tomorrow because of the, I'm just going to call it a bailout. I know we could argue about definitions, but just for the sake of the stream and sake of time, we'll use the term bailout. I tweeted that markets are probably going to rally. Markets are probably going to rally on this. Now, is it probably going to fade throughout the day? Maybe, but earlier in the stream we talked about the cockroach theory, that where, if you see, one cockroach crawl out of the kitchen counter, there's probably 10 more under there. So, if Silicon Valley Bank went under and we had to do a bailout for them, well, how many other banks are at risk? So to your point, on Friday, take a look at some of the stocks that were down the most. One of which being ticker symbol SBNY, right? And that bank was called Signature Bank. And crazy enough, they actually went under. They were forced to go under by state regulators today. I think that stock is trading at $70 a share. That is a zero. That's a big zero. So equity holders that held any stock in that bank, Signature Bank, is done. Silicon Valley Bank, equity holders and bond holders are done. But the other two banks, right, and I'm not to spread sort of contagion fears, but if you just look at the price action in the stock price, this is Downing Street. This is probably traffic for everybody trying to get in the tunnel to go back out to New Jersey. But if you look at the price action of the financials that were taking the biggest beating, I think First National Bank was down 20%. Charles Schwab, which is a broker dealer, they do have a bank, so Charles Schwab Bank, but it's a very small portion of the business. Charles Schwab was down big, and I mean really big. I think, again, as we talked about, the stocks in the financial industry that held the best were JP Morgan, Bank of America, and the big four, so to speak. So could this be a buying opportunity for the regional banks now that the quote-unquote bailout happened, or is the Federal Reserve and Janet Yellen at the Treasury going to have to spin up another bailout plan for another bank that may fail next week? I don't know. What do you guys think? Evan Weeks is concerned about Charles Schwab, given that's where my 401k is. Yeah, I got a lot of money with Charles Schwab. I got a big balance with Charles Schwab as well as Interactive Brokers. But at the end of the day, I'm not moving any of my money. And, I don't want to feed into the contagion of the bank runs. And, we'll see how it plays out. Now, my thesis is that, wires are already sent to go out. I've been speaking to people that are very well connected in the industry, in like the startup industry, and they're like, look, we bank with this regional bank. We already have a wire that's set to go out first thing Monday morning. Obviously, this was previous to the whole bailout stuff, but I think people are just really, really freaking scared. And in my view, you need somebody in the government that is a reliable, I don't think Janet Yellen's the person. You need a very, very strong voice just to reason with the American people and say, everybody, let's just chill out, okay? Just read the American people the facts and literally tell everybody to chill out. Although I did see some counter arguments to that point on Twitter to say that, hey, Tom, if you have a federal official come out and address the nation about this, that could spook people even more. So I get it, but I think communication is very big in this type of situation, in my view. What do you guys think? Do you think that if a federal official addressed the nation, or even the president addressed the nation today, would that do more harm than good? Would you guys say? Hey, Dan Zhang says, I would prefer Hank Paulson over Yellen every time. Hey, Dusty Call is joining us. Good to see you, Dusty. Thanks so much for joining us. M Med says, how soon do you expect Black Friday? How low will the Dow Jones Industrial Average go? Well, futures are green tonight. MBLI says sometimes the best moves are the ones that you didn't make. I'm not moving my 401k at the moment. Yeah, I'm not moving any of my money. I think from what I know about the situation, banks are very well capitalized. Silicon Valley Bank was just a bank run. And I think if you're moving around your money and you really don't know what's going on, not to say you're part of the problem, but that's technically what a bank run is, right? People freaking out and panicking. Hey, Elizabeth G says Biden said he will speak on the bank issue tomorrow morning. Oh, okay, I didn't know that. Thank you, Elizabeth, for putting that in the chat. Yeah, see, I didn't know. So there you go. So I guess President Biden is going to address the nation about it tomorrow morning, first thing. Jeff W277 says, I was on one software development project for 3 months. They got me on an email group that included Liz Ann Saunders. Wow, interesting. Sharon Lee says there's no confidence in grandma yelling or thief in the kitchen. I think that the biggest thing about this whole event is that the average American is waking up that technically, the banking system is a Ponzi scheme. We run on a fractional reserve lending system. And I've said this many times, when you deposit $1 million in JP Morgan Chase, your $1 million is not in the bank, right? The banks take that money and then lend it out 1 million times over. They make a small business loan, they make mortgages. That's what a fractional reserve lending system is. Okay, so all banks, technically, all banks, not just Silicon Valley Bank, all banks in theoretically, are susceptible to bank runs, right? So when you have Peter Thiel saying, hey, deposits have been falling off a cliff at Silicon Valley Bank for 4 quarters now, it looks like they're going to have to start selling some of their mortgage-backed security portfolio, pennies on the dollar. I'm going to call up every single one of my startups that I invested in and tell them to pull money out of the bank. Well, what do you think everybody else is going to do? Everybody else is going to run to the exits as well. So you had $40 billion on Thursday leave Silicon Valley Bank. No bank, guys, no bank would survive that. None. So technically, fractional reserve lending, fiat currency, and this is what some of the Bitcoin maximalists and what some of the gold bugs and silver bugs have been saying for years, right? The fiat system is kind of a Ponzi scheme. It kind of is. Evan Weeks says the whole U.S. economy is made out of consumer trust and belief. If that collapses, the whole house of cards goes. Yeah, and Evan, there's a really, really good book. You're 100% right, by the way, 1,000% right. A fiat currency, the only thing that gives a fiat currency value is the trust in the system. Quite literally. So I know that not everybody likes Bitcoin, and I get that. I don't care if you do or not. But there's a really, really good book. Wow, check out this building. So guys, real quick, as we go down by the Holland Tunnel, so this is the Holland Tunnel right here on the corner of Broome Street and Varick. All of this is all new development. So notice some of the older buildings here as we head to Lower Manhattan. It says this one was 1870. This building was built in 1870. All of these buildings are being torn down and you're getting these brand new sort of ultra luxury apartment buildings. This one kind of looks interesting, doesn't it? Look at that. And you're getting them everywhere. Look, here's another one. You're getting all of these brand new luxury apartments with all the amenities, the gyms, all that stuff. Now, very similar to this, and maybe we'll do this tomorrow. You guys see all the way in the distance, all the way down there, those big buildings, you could sort of see, they kind of look like triangles. That's actually the Hudson Yards. And before the Hudson Yards was built, it wasn't a rough area as in terms of it was dangerous, right? I'm talking about, 2010, but all of that area was, gas stations, it was, mechanic shops. And I used to go over there a lot, by the way, because that's how I used to walk to go to college. It is completely different. I mean, man, West End Avenue is totally built up. There's brand new luxury apartments everywhere. It's kind of crazy to see the change in real time. I mean, here's another one. Look at this. You have about 24,000 square feet of retail and office space. I mean, I don't know who's probably going to fill this. This is probably going to remain vacant for quite some time. Especially with remote working. You don't really have the volume of people coming into Manhattan anymore as you used to. More volume is actually now on the weekends, but it's kind of a cool neighborhood walking around here. I forgot what I was going to tell you guys, but I get distracted easy. Hey, Evan Weeks has the developer down at Hudson Yards managed to get a gaming license figured out for the casino they wanted to build over there. What? I didn't even know they wanted to build a casino over there. Is that true? So where are they going to build the casino? Because here's what I heard originally. I heard that in Times Square, they wanted to put a casino there. That's the only plans I heard about a casino in New York. And let me tell you guys something, okay? And this is just how I feel. I'm just going to give you my biased and sort of unfaltered opinion. That would be an absolute unmitigated freaking disaster to put a casino in Times Square, okay? Because, casinos, it just attracts a lot of seedy characters, and you don't need that in Times Square. There's already enough fraud and seedy characters going down there. So if they did that, I mean, that would just be totally cataclysmic. And again, I may get a lot of heat for that, but I'm just telling you guys how I feel. I respect everybody else's opinion. You guys know that. But from my experience living in New York, just go out to some of the casinos in Queens. Not great. Let's just say that. Oh, Jenny Trickett, thank you so much. See, I get sidetracked, guys. I apologize. Feel free to, rope me back in. You guys know my mind races, especially after the week I had. So, yeah, we were talking about fiat currencies, okay? This is a very good book. Beautiful view of the World Trade Center here. Very good book if you want to know a history of currency in and of itself throughout in the entirety of human civilization, okay? And it is called the Fiat Standard and the Bitcoin Standard. Now, a lot of you, and I've gotten emails about this, no, I don't want to read it because I'm not interested in Bitcoin. I totally get that. I totally understand. The entire first half of the book has nothing to do with cryptocurrencies and Bitcoin. It is just a conclusive and very well-documented history of currency exchange throughout history, right? All the way going back to bartering, all the way going back to trading with seashells. And it is such a good history lesson for people to understand the evolution of commerce, right, globally, and fiat currencies, and how all fiat currencies, 100%, okay, 100% of all fiat currencies that have ever existed ever, this is the Canal Street 1 train station here, have gone to zero, right? And because fiat currencies are built on trust, they're inflationary currencies that are only built on trust exclusively. So when we talk about fractional reserve lending, and a lot more people are learning about this now, the vast majority of deposits at the bank are not available for you to withdraw. So if you go to the bank and everybody goes to the bank at the same time, you're going to have a bank run and all the banks, in theory, could fail at the same time. But very good book. Very, very good book if you want to learn about the history of commerce, history of fiat currencies, a deep, conclusive dive into fractional reserve banking and fractional reserve lending. Very good. So here's some more of these new developments here. This is actually a pretty nice view. If you look all the way past the statue here, let me try to maneuver the camera a little bit better. You'll actually see the Empire State Building. It has a great view. So imagine that, guys. If you live in any one of these new developments here, in theory, you could have an unobstructed view of the Empire State Building, but also, if you're high enough, you'll see over this, and you could actually see the World Trade Center too. So those apartments there are probably, you know, $3 to $5 grand for a 1-bedroom or maybe a studio. Hey, Richard Vogel says, Tom, it looks like Gotham City. It really does. 7914 says, what is the name of the book, please? The Fiat Standard. And the other book is the Bitcoin Standard. So the Fiat Standard and the Bitcoin Standard. Hey, MBA Elias, thank you so much for your very kind, very generous $10 donation. This is Tom, great job talking about the historic Silicon Valley Bank collapse event. Awesome, we can all share our opinions. Yeah. So MBA Elias, thank you for your donation. And I agree. I mean, guys, how crazy has this been? We've been able to literally navigate one of the worst banking crises in American history live on stream in New York. That's crazy. And we all can chime in. Hopefully I don't get hit by this car. That'll really be a boom ending to this Silicon Valley Bank situation. But we could all converse on YouTube in real time as this is going down. That is blowing my mind. That is crazy. You could say the same thing about Twitter Spaces too. You know, I think in 15 years, there'll be even more crazy stuff. Maybe it'll be like virtual live streams where you'll have holograms. It's pretty interesting technology. Pretty wild. I do want to point out this building in front of us. This is the Jenga building. Now, I believe Marcelo Claure, so he was actually my old boss at Sprint, SoftBank. So SoftBank made, so if anybody's familiar with SoftBank, Masayoshi Son, very famous Japanese investor. Over the last couple of years, performance has been rather poor. Obviously, you could probably point to a couple, WeWorks and the like. But they made a big capital injection into a major telecommunications company here, Sprint, for those non-Americans. We have a lot of international viewers, so Sprint. And Marcelo was appointed the CEO of Sprint. This was post-merger. So now Sprint actually doesn't exist anymore, and you have T-Mobile. Now they call it a merger, but it was really an acquisition. T-Mobile was a very well capitalized and very well run telecom company, and they pretty much just acquired Sprint for their spectrum. So Sprint had a ton of very precious mid-band spectrum, and I think that not going too far off topic here, I think if you wanted to make an argument for who's going to be the leader in 5G, I think it's going to be T-Mobile, because they have so much mid-band spectrum, which is perfect for the latency requirements of 5G. So very low latency, high throughput there. So the Jenga building, I think Marcelo has a unit in there. But in other news, right, and I want to be very sensitive to this, during the whole meme stock debacle, which I was very outspoken about, by the way, and I think a lot of viewers of Walks in Wall Street knows that. I've always been really, really against the crazy speculation in the meme stocks like Bed Bath & Beyond, GameStop, and AMC. The CFO, the Chief Financial Officer of Bed Bath & Beyond, unfortunately unfortunately passed away from a suicide in that building. I think he owned a unit there, and I could imagine all the stress that he was under, being the CFO of a company that was in the limelight of this crazy, short squeeze debacle, and the company was definitely not in good financial standing. So, a lot of notable individuals have lived and resided in that building. So now we're walking down Canal Street, everybody. We are now headed into New York City's Chinatown. Now, I always like walking down Canal Street. You can essentially go all the way coast to coast from east to west on the island of Manhattan. If we walk all the way down here, we'll actually run into the Manhattan Bridge. So maybe we'll do that. I don't think we'll walk across it tonight, but I'll show you guys in and around the area. Maybe we'll have enough time to go to Chinatown tonight. Lex says, how long do you think Barnes & Nobles will be around? Honestly, hopefully a long time. I actually really like Barnes & Nobles. I think Barnes & Nobles did a pretty good job pivoting to, obviously an online marketplace, but also they did a good job with pivoting to, building cafes. I think they have a partnership with Starbucks, or maybe there's like some licensing deal. Here's the original streets in New York here, as you're looking up towards Soho. But I don't know. Hopefully they make it, and they're not another victim of the Amazon effect, for lack of a better term. But I don't know. I think it's important to have bookstores that you could actually go in physically, speak to people, see humans. I think it's healthy. Yeah, I heard that. So Pity P says Amazon is closing all their physical bookstores. Do you know anything? I want to ask you a question. I always pass those Amazon Go stores. Do you know what I'm talking about? So if you walk into one of these stores, and there's actually one by my old office at Bryant Park, there's no people who work there. There's like one guy that stocks the shelves, but all you do is you walk in, you take whatever you want off the shelf, the AI and the cameras follow you around the entire store, and you walk out and it automatically gets charged to your Amazon account. Now, are those being impacted as well? Are they going to expand upon those? Or are they going to wind those down? And has anybody ever been in those stores? Hey, Kevin Moore says, Tom, the FDIC has $400 billion to cover losses/claims. They are carrying $70 trillion in liability. Many people will be left with nothing, says Kevin Moore. Interesting. Yeah, I don't know about that. I just right before we started streaming, we got the I guess you can consider it the bailout news came out. So I haven't really had time to do too much diligence and read through that. It was sort of breaking as we started the stream. Hey, Bill Rowland says, we have an Amazon Fresh, a larger grocery store here, where you just pick stuff up and walk out. Interesting. What has your experience been with that? Good, bad, not good? Hey, Brad's Brain says, Tom, I've gotten into album collecting. My favorite place nowadays is half-price books to search old albums. I always walk through the store. Interesting. I'll have to check it out. 7914 says that's a lot if banks go down. It really is. All right, everybody, we'll blow through this real quick. So we know Tuesday, right, we're going to hear from Caterpillar. So ticker symbol CAT is going to report earnings. We're also going to hear from Lennar, which is a major home builder. I think that's going to be probably one of the most important earnings or companies reporting earnings next week, because interest rates have moved significantly higher, almost about 500 basis points as we talk about the Fed funds rate in a single, I would say, less than 24 months. So we'll get to see from the CEO if that's materially putting extreme pressure on sales of new homes. Now, we're probably going to see that they're discounting new homes. They're probably going to buy down customers' points on their mortgage to try to make it a little bit more affordable, just to get deals done and move inventory. And I think that's why over the course of the last 2 weeks, we've actually been seeing new home sales go up while existing home sales still crater. Because if you think about the existing home sales market, there's less negotiation and less flexibility a used home could have, right? If you think about a new home sale, you know, it's essentially you're a business, you're building these homes, and you're selling them off, and you can manage your inventory. You can discount these homes more readily. You can get creative with the financing. You could buy down the points on those mortgages to try to make it a little bit more affordable for your customers, so you move that product faster. So it's going to be interesting to see how that plays out. If I had to make a bet, right, or an assumption, I should say, I think this banking crisis, even though I guess quote unquote you could say it's been averted by the bailout, I think a lot of people are going to be thinking twice before buying a home right now. They're going to be like, whoa, what the hell just happened? I think this was a big right hook across the face of a lot of Americans. Me too, right? This was a big scare. I mean, this could have been a calamity. It very well still might be a big calamity. So I think it's going to pump the brakes on a lot of spending. That's just my view. Then we have the CPI, right? Consumer Price Index comes out on Tuesday. Consensus is for 6%. January CPI was 6.4%. Help us, God, if CPI comes in hot. I think if the CPI comes in above expectations on Tuesday, I don't know if the market's going to be able to take that, because then the Fed is going to have to make a really tough decision to get inflation under control in a time when you have banks failing in America. So that could be a whole other calamity in and of itself. Yeah, I mean, Jenny Trickett, as it's impacted me emotionally, it was kind of scary. Yeah, I mean, I knew founders of startups that are like, dude, I had $17 million in the bank, you know, and they literally thought that they lost $17 million, right? So I get it. It's wild, but rest assured, on Monday, according to the press release by the Secretary and I should say the Treasury Secretary, the Federal Reserve, and the FDIC, depositors should be made whole 100% by tomorrow. Hey, Dan Zhang says, Tom, do you think now is the right time to say Peter Schiff has been right all the time? So I agree, Dan, that Peter Schiff is always right. Now, this is what I mean by this. For those of you who don't know, Peter Schiff is a very well-known and respected economist. He's actually the CEO and founder of Euro Pacific Capital and Euro Pacific Bank, which, quite ironically enough, regulators shut down his bank, and it's probably the only bank that could actually have even managed to support a bank run. That's the irony of the whole thing. But you know, Peter Schiff has been very outspoken about, you know, the banks are going to collapse, the housing market's going to collapse, the stock market is going to collapse, and the economy is going to collapse, right? But a broken clock is right twice a day. And I think what a lot of bears, right, I like to call them perma bears on Wall Street, they've lost money and they've missed out on one of the most aggressive and most life-changing bull markets in American history, right? From 2009, this is Chinatown down this way, from 2009 up to 2022, right? So is he correct in his thesis that the Federal Reserve is the problem right? Is the Federal Reserve creating all of these bubbles we have in the United States? That's correct. But I think a lot of perma-bears significantly underestimate just how long the Fed can keep kicking the can down the road, right? And it's sort of like you have to be able to pivot and change with the trend in order to participate in a bull market, instead of just, being stubborn and being long, let's say, European equities for 14 years, right? So yeah, at some point, he is 100% correct, and he is 100% right about the Federal Reserve. He is 100% right about how quantitative easing is artificially inflating asset bubbles. That is 100% right. But the timing of it, nobody really knows. That's sort of what I would have to say about it. And I would highly suggest people check out Peter Schiff. He actually just put out a pretty good podcast about the whole banking situation. If you look up the Peter Schiff Show, he has a really, really good podcast. I would highly advise people to check it out. I like Peter a lot. All right, guys, welcome to Little Italy. We are on the corner of Hester Street. Love all these old original buildings down here. Yeah, Mike Ceases loved the Peter Schiff theme music. I like it too. Let's see. Hey, Kevin Moore says, Tom, looks like the bond investors are finally going to wreak havoc and crash the stock market this week. Fractional lending is a hoax. Lending money they really don't have. The banks are going to fail as well. Well, we sort of talked about that, and I think a lot of Americans, again, not to sort of sound so repetitive, but guys, that is the system in which we live in, right? We live in a fiat currency system of fractional reserve banking and fractional reserve lending. And in theory, all banks are prone to bank runs, right? If you yell fire in a crowded theater, people are going to rush to the exits. So in a way, you're right. However, I don't know if I would go as extreme to say, everything's going to unwind tomorrow. It very well could. If you want to talk about price action, the Dow Jones Industrial Average, the NASDAQ, and the S&P 500 on Friday all cracked below their 200-day moving averages on heavy, heavy volume. Now, I posted some interactive charts for you guys to take a look at on Twitter. I'm not sure if you guys have a Twitter account. If you don't, I would highly advise you create one. I think there's a lot of good value there. But you could follow @WalksWallStreet on Twitter. I think if you guys want to connect with me offline, if you look in the description of this video, I think I put my Twitter handle there if you guys want to chat. I chat with you guys throughout the day periodically there. Again, in the distance, you could see the Empire State Building from Little Italy. I'll step to the side to show you guys some of the beautiful fire escapes and the architecture here. Hey, Julia M., what's up? Julia welcome, says it was so good to see Tom on the Twitter Spaces today. Yeah, guys, so occasionally I'll pop in and out on the Twitter Spaces, say what's up. I was speaking in a few Twitter Spaces today. I think those are saved and archived if you guys want to go back and check it out and watch them. And that's the cool thing about Twitter Spaces too, right? There's no barrier to entry, right? You could be on a Twitter Space with Bill Ackman, and all you do is click the button, raise your hand. If they call on you, you could speak and say your piece. I think that technology is really beautiful in that way, where technology knocks down the very stiff and cringy, white collar finance barrier where, the only way you can get a seat at the table is if you get an MBA at Columbia, right? Now, if you have a Twitter account, just tweet at whichever hedge fund manager, whichever big banker or politician you want, and you'd be surprised. You may get a response. All right, guys, this is Ferrara Bakery. This is one of my personal favorite Italian bakeries in New York. I think it may be closed, but I'll try to get a closer look. You guys can see the inside. But this is an awesome place. I always used to come here as a kid, my grandmother and stuff like that. It was established in 1892. It's almost kind of hard to believe. But here is the inside. It's open to 10 p.m. Trap news is weed is legalized in New York. I think so. I think you could actually buy marijuana at some of the dispensaries here completely legal. I don't even think you need, what is it called? I was going to say a license, but that's not right, right? Before marijuana was legalized, everybody, what did you need in order to buy weed? Was it a prescription from the doctor or something like that? Or a card? I don't know. I don't smoke weed. But yeah, I mean, if you're interested in that stuff, if you like that stuff, I mean, by all means, you could actually purchase it here. I think the dispensary is actually not too far away from where we're standing right now. But I think you may be correct. I think you just walk in and get it. Medical card, that's right. Lena Sandoval, medical card. Copy that. But yeah, I don't think you even need that now anymore. I think you could just come in and buy it. Again, not my thing, but if it is your thing, it is legal. Billy says medical recommendations. We'll take a look at some of the other buildings here, just to kind of give you guys a glimpse. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami, talking about the financial markets. We'd love to have you guys here. Ryan Beck says, Tom, Goldman Sachs just made a call. They think there will be no hike 3/22 at the FOMC meeting. Wow. Talk about the volatility in that, man. Like, we were just talking last week that we're like, hey, with the jobs number that came out that was better than expectations, with unemployment at 3.4%, we think that there's a high probability now from a 25 basis point rate hike to now a 50 basis point rate hike. And then turns out over the weekend, a freaking bank blows up on Thursday, closes down on Friday, and now everybody's calling for a big pause. This is going to be wild, guys, to see what happens. I think the big question now is, will the Federal Reserve go full quantitative easing and blow inflation through the roof? I don't think they're going to do that, but we'll see. But I didn't know that. So breaking news, Goldman Sachs calls for a pause at the next FOMC meeting. Interesting. Tommy G is here, says my community bank is FDIC, so I'm safe. Yeah, I mean, I wouldn't, and again, I can't advise anybody what to do. I'm not an advisor or anything, but again, a classic bank run is caused by fear and contagion. So, you know, FDIC insurance is up to $250,000. So, you know, if a bank that you have money in and you have $250,000, you will get it back via the FDIC. But, you know, for all of those people who are joining right now, and sorry if I'm repeating this, but I think it's really important. If you type !press in the chat, !PRESS, I programmed the Nightbot to give the breaking news of the bailout criteria, so explaining the bailout, or the backstop, as the government wants to spin it, of the Silicon Valley Bank fiasco, as well as the other major New York bank that went under called Signature Bank, which was mainly a business bank that banked cryptocurrency style companies. Take a gander at it, take a read through. Now, the way I interpret it, and again, this was sort of breaking news right as I clicked to record on the live stream, but it's essentially just quantitative easing to backstop depositors. And, you know, it is possible, I'm not going to say it's off the table, but, you know, maybe the Federal Reserve goes full on QE. I mean, watch the bond market next week. I think next week the bond market is going to tell all, because if there's really going to be a systemic bank run, you may see the yield curve compress a little bit. And the reason why I say that is we've been sort of pounding the table about, oh, you know, it's a better deal to buy a 1-year treasury because it yields 5%. If you have everybody ripping their money out of the bank and slamming it in treasuries, you could have yields come down. So I think that would be very telling. So we'll see. I mean, if you look at the inversion between the 10 and the 2s, I think it's now 100 basis points, which is the most it's ever been inverted in history. So we'll see if that compresses. Kevin Moore says, Tom, have you seen the new U.S. Treasury notes that are backed by gold? The Federal Reserve and the Fiat money are going away very soon. I haven't seen that at all. If you have any link or something like that you want to share in the chat, please do, to provide your source. I would love to see that. Wow, Brad's Brain says, Tom, I had information that an NFL owner had 100G in multiple banks when 100 grand was the FDIC limit. I had this on a very good source. What do you mean by that, Brad? Let me read that again. Maybe I'm reading the comment wrong. Or had $100,000 in multiple banks when 100 grand was the FDIC limit. Oh, so you're saying just to spread his risk around, he put the money in multiple banks? Interesting. I don't think it's possible, right? And again, that was an argument. I don't really want to beat on this too much. We covered it in depth for like 2 days. But a lot of people were like, look, if these founders and these VCs are putting more than $250,000 in a bank account, that's their own fault. They deserve to lose money. I think those people are very unfamiliar of how to run a business. But if you've ever owned a business or something like that, it's almost impossible not to have $250,000 in the bank. Some people's payrolls are like $150 million a month. So it's impossible to spread money throughout 50 million different accounts. Lastly, guys, on Friday, talking about an interesting leading economic indicator, we're going to hear from the University of Michigan as they release their consumer sentiment survey, or I should say consumer sentiment index on Friday. And if I had to guess, let me actually rephrase that, because now that I'm thinking about it, I think the next consumer sentiment survey is probably going to be the worst reading we've ever seen ever after the banking collapse. But this consumer sentiment survey was obviously done before the big banking debacle. I still think it's probably going to come in a little bit light. We're seeing consumers starting to at least take their foot off the gas a little bit as it relates to spending. But again, we could use these as leading economic indicators. Now, I would say probably one of the most important leading economic indicators is the ISM PMI numbers. This is Mulberry Street and Prince Street that we're passing right here. But the Institute for Supply Management Purchasing Managers Index, or the PMIs, declined once again and is now below that 50 reading. So I think it's going to be important to look for those frothy territories where we may be able to see some sort of a bottoming pattern in the PMIs. In some select categories in the PMI report, which we've went over, we're starting to see new orders pick up, which is good news. I think if we see some sort of a flush out in the S&P where we break the October lows, it could potentially be a very, very good buying opportunity, but we'll see. We'll see how the week plays out. And I think the only other thing that we need to look forward to next week is Adobe. They're reporting earnings on Wednesday. So we're going to have big earnings, we're going to have big inflation data, we're going to have consumer sentiment index, and we're probably going to have more updated data on this, potential banking collapse, even though the backstops are already put in place. Hey, David S. is here, welcome. Somebody says, Green Suburban says, hey Tom, is FDIC $500K on a joint account? Thank you. I actually don't know. I do not know that. Does anybody, we'll turn to the audience. You guys know? I don't think so, but yeah, I don't know. Again, like I said, we've repeated this many times. I think a lot of this stuff is just contagion because people are scared, right? Obviously. If you have news spreading across the country that, oh my gosh, a bank is collapsing and people could lose money and the media is fueling this, I mean, people are obviously going to go to their banks and freak out, right? And I'm not saying that's an inappropriate reaction. I mean, it's, everybody's human here, right? So as we go back to that conversation about trust, in a fractional reserve lending system, it's all about trust. So if the consumers and Americans lose trust in the banking system and they can't be assured that if they deposit money into a bank account, it's going to be there, I mean, that's not good for the growth and the health of the U.S. economy. So Frank says, Tom, if you have $1 million in stocks, you can just transfer ownership to another brokerage account if the bank was collapsing. Yes, and I also think brokerage accounts have different, I think it's SPIC. Is that right, everybody? I think on a bank it's FDIC, but a brokerage account, what is the other form of insurance? Is it SPIC, I believe? MBA Elias says many people outside tech or Silicon Valley didn't even know it existed before today. Yeah, exactly. That's the thing. And, to go back to another point, the reason why many people that were well connected in the industry, and we were talking about this all weekend, you need to find a solution to this problem, because come Monday, if the average Main Street guy or girl finds out that a big bank collapsed, there's going to be a big bank run, right? And again, totally different situation than 2008, because 2008, it was a systemic problem, because you had banks speculating and writing really, really bad loans, right? When we've talked about the 2008 financial crisis ad nauseum. Team, my phone is going to die. We're coming up on the 2-hour mark. I think we covered a lot. I think the last thing I'll say, and I said this before, 15 years ago today, ironically enough, Bear Stearns actually announced to their investors that everything was going to be fine. We have ample amounts of liquidity. 4 days later, JP Morgan Chase has to bail them out. They bought the bank for $2 a share. Stocks rallied. You had a big, big rally, I think of 4.2%. And then a year later, stocks were down 48%. So maybe we could have something similar play out. Who knows? We'll talk about it tomorrow night, Monday, right here on Walks in Wall Street. So thank you guys for joining. I appreciate it. If you enjoyed the stream, leave a like on the video, share the show with your friends, subscribe to the channel, and we'll see you guys tomorrow. Julia M, Charles, I appreciate you. Cooking, appreciate it. Eyeglass Lady, Joan K, Ibrahim Azam, Tiffany Allen, Abdullah Muhammad, Mike C, thank you, sir. Appreciated. Brad's Brain, Khan, thank you for joining us. Nina, appreciate the conversation. I want to be GMO, appreciate it. William, thank you so much. Unij22, Brad's Brain, Ryan Beck, Ryan Royal, Joe C, British Gray, Brian into the Mighty Bull. Have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. I'm wishing you guys a fantastic start to the week. We'll tie it all together tomorrow. Take care.